Hello everyone, my name is Tim and I'm almost 40 years old. I will be turning 40 this year, so I decided to do some small changes to my YouTube channel and I hope you enjoy them. One thing I'm going to be doing is I'm still going to be doing all my stock reviews and particularly dividend stocks and options trading, both of which are things that I love about the stock market and being able to build your wealth. So that's going to continue, but I'm going to be changing up the format of how I do the videos a little bit. For one thing, I am not going to be mentioning the name of the company or the ticker symbol until the very end, so I'm hoping you will watch to the end of the video to find out the stock that I'm actually talking about. And so it'll be a little bit more entertaining that way, especially if you are managing to guess what the stock is and put them in the comments below. That would be interesting to see what you all think the stock is before you get to the end. The stock I'm going to be reviewing today has a stock price currently at the time of this recording of $34.13 per share. It has a PE ratio of 10.31 and a dividend yield of 6.21%. Has a market cap of $18.7 billion. Over the last year, it is up 10%. The company provides transportation and midstream services for the energy industry. It operates through three segments: pipelines, facilities, and marketing and new ventures. The pipeline segment operates conventional oil sands and heavy oil and transmission assets with transportation capacity of 3.1 million barrels of oil equivalent per day, ground storage of 11 million barrels, and rail terminaling capacity of approximately 105,000 barrels of oil equivalent per day, serving markets and basins across North America. The facilities segment offers infrastructure that provides customers with natural gas, condensate, and natural gas liquids, including ethane, propane, butane, and condensate, and includes 354,000 barrels per day of natural gas liquids fractation capacity, 21 million barrels of cavern storage capacity, and associated pipeline and rail terminaling facilities. The marketing and new ventures segment buys and sells hydrocarbon liquids and natural gas originating in the Western Canadian Sedimentary Basin and other basins. The company was incorporated in 1954 and it is headquartered in Canada. They currently have 2,349 employees. So their revenues have increased from 2017 till now, except for 2020, due to obvious reasons from when the pandemic happened. So in 2017, their revenue was $4.3 billion. And then 2018, it was 5.3 billion. 2019, 5.5 billion. Their gross profit also rose even in 2020. So in 2017, the gross profit was 1.1 billion. And then in 2018, 1.3, almost 1.4. In 2019, 1.5. In 2020, 1.6. And in 2021, 1.9. Their information for year end for 2022 obviously hasn't come out yet, as this video is being recorded in early January 2023. So this company does have a 6.21% dividend yield. That's over the trailing 12 months. An annual payout for the last 12 months of $2.12 per share per year, with a payout ratio of 73%. They have a 5-year growth rate of 6.43%, and that is my cat Harmony that you see right there. You can say hi to her. And there are no years of dividend growth. They had to cut their dividend recently, so the actual amount of their dividend is 16 cents per share every month. This is a monthly paying dividend stock, and their ex-dividend date tends to be towards the middle of the month, so around the 14th or 15th, depending on what day that falls on, but right around there. No, they do have a forward-looking dividend yield that is lower than what I just said. They have a forward-looking dividend yield of 5.64%, so they are going to be lowering their dividend, and according to the dividend estimates that is on Seeking Alpha, they are estimating that it is going to go down to less than $2 per share per year, probably until after 2025. So keep that in mind. So for their dividend history and safety, they are at the consecutive years of dividend payments is 120% of the industry standard. They have 11 years of consecutive dividend payment. As far as options go, this stock is not good for any kind of options trading. I mean, I suppose you could probably do selling calls if once you have decided you want to buy, for instance, 100 shares, you could sell a call, earn some additional income on top of the dividend. But this stock has monthly options, which is something that basically makes it to where I will not do any options trading on a stock that does monthly, or I will only trade options on weekly option stock. So they have to have options that are available every week, or else I don't trade them, regardless of how high the dividend is or how high the premium might be. It's just not worth it, in my opinion, for just 1 month of options when there are other stocks that have weekly options. Now, the volume of shares that are traded per day for this company is about 500 million per day, with an average volume of about 480 million, and it has a market capitalization of $18.825 billion. Now, in quarter four, 2021, their earnings were below expectations. They had an expectation of 0.51, so they were far below their expectations. Now, quarter one of 2022, they had a surprise increase of 15.63%. So they had an estimate of 0.56 and an actual of 0.65 for their earnings, which, yes, I know this isn't very much, but it's not bad for this type of company, which you'll see at the end when I tell you who the company is. In quarter two, they had another surprise of 11%, an estimate earnings of 0.48 per share, and an actual of 0.54. Quarter three, again, they had a nice surprise this time of 420%. So they had an estimate of 0.45 per share and an actual of 2.33. So quarter three was very good for this company. And then we don't have any information yet as of quarter four. So for their income on quarter three of 2021, they had a revenue of 1.69 billion, a net income. Then in quarter four, they had a revenue of 2.02 billion, net income of 63 million, and a profit margin of just 3.13%. And quarter one of 2022, it went up nicely. They have a revenue of 2.43 billion, a net income of 384 million, and a profit margin of 15, almost 16%. And then in quarter three, they had a revenue of 2.4 billion, a net income of 324 million, with a profit margin of 13.5%. And then, like I said, quarter three is where it just went to the moon. They had a revenue of 2 billion. Their net income rose to $1.32 billion with a profit margin of 65%. Now for the big reveal, the stock that I've been reviewing during this video is Pembina Pipeline, ticker symbol PBA. I hope you found enough information to let you see if this is a stock that interests you, and that way you can do more research on your own to see if you'd like to begin investing with them. Either way, I hope you have a great day. Thank you for watching the video, and I hope you enjoyed it. And let me know down in the comments below if you like the new format or not, or if you would prefer me to go back to the way I was making videos last year. Hope you have a great day.